FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And most importantly, this is month one, week one, day one of Trading with a Purpose. So I want to make sure that I welcome everybody to the new series. If you are new to the channel, just do me a favor, look a couple videos before this. You'll see the orientation videos and all of what we're doing for the next 365 days. I hope that essentially this journey brings more purpose to all of you who have been trading and trying to get to the finish line. Let's get right into it in this first video, guys. So the first thing that I want to do in this year-long mentorship is I want to start off with probably one of the most important factors when it comes to being successful in trading. And so the first thing that I'm going to do is I'm going to talk to you about the lies you've been told about trading. Now, most traders enter the markets with a flawed perception of what it really takes to succeed. They think the key is predicting price movements and finding the perfect entry or having an unbeatable strategy. But what if I told you that's not the case at all? I'm going to challenge some of the most common misconceptions traders have, and I'm going to show you how they might be holding you back. So in this first video of this entire year-long mentorship, I'm going to expose these lies that have been told to you about trading. So without further ado, let's get this started. All right, so the first thing that I'm going to talk about is basically market perceptions and misconceptions. Now, I'm going to ask you some questions, and I want you to think about these questions in your own trading right now. These questions will challenge how you see the market and your role as a trader. So I want you to really focus in, guys, on this video. I'm telling you, this first video is going to set up everything that we do for the next year. So do me a favor, write down these questions and answer them. The first question is, do you believe that making money in trading requires knowing what the market will do next? If so, why? Now, most traders believe that they need to know what's coming next to be profitable. They obsess over forecasts, predictions, and market analysis, thinking that if they just get it right, they'll win. But let's be real. Do you ever really know what the market will do? Even the best traders don't. Trading isn't about certainty. It's about probabilities. It's about executing based on an edge, knowing that over a series of trades, the odds will work out in your favor. If you're waiting for certainty before pulling the trigger, you'll either never take a trade or you'll hesitate and miss opportunities. Second question, have you ever caught yourself searching for a way to trade without taking a loss? What does that belief lead to? Now, be honest with yourself. Have you ever found yourself chasing the perfect strategy? The one that wins all the time, never takes losses, and makes trading effortlessly. Think about the landscape of YouTube right now. Think about the landscape of social media. Isn't that more truer right now than ever? Chasing the perfect strategy because some algorithm god has a strategy for you? Think about it. Let me tell you, that doesn't exist. And the traders who spend years searching for it, they never make money because they're stuck in analysis paralysis. Losses aren't the problem. It's your fear of them that's killing your success. If you avoid losses at all costs, you'll do a couple things. One, you're going to cut your winners too early out of fear. Number two, you're going to move your stop loss to avoid taking a hit. Number three, you're going to avoid trading altogether because you're scared to lose. The sooner you embrace losses as part of the game, the sooner you'll start playing to win. Is trading success primarily a function of analysis, or are there deeper psychological and emotional components involved? Most traders believe success comes from knowing more, either more indicators, more patterns, more analysis. But if that were true, wouldn't the most analytical traders be the richest? But they're not. In fact, many of them struggle. Why, you may ask? Because trading success is 80% psychological and 20% strategy. It's not just what you know, it's how you react under pressure. It's not just about your system, it's about how well you execute it without hesitation. Think about your own trading. How often do your emotions interfere with what you know you should do? How often do you feel like the market is personally targeting your trades? What does that belief reveal about your mindset? Have you ever felt like the market is watching you? That the second you enter a trade, price moves the opposite way? That it's all some kind of setup against you? That is a dangerous mindset, because it shifts the responsibility away from you and onto the market. And if you think you're a victim, you'll trade like one. The market doesn't know you. It doesn't care about your trades. It moves based on liquidity, volume, and institutional positioning. Your job isn't to fight the market, it's to align with it. So I'm not trying to beat the market makers, I'm trying to trade with them. What does it mean to trade what you see and not what you think? Do you actually follow this principle? This might be one of the most important questions you'll ever ask yourself as a trader. Do you trade what's actually happening, or do you trade based on what you expect to happen? Let me tell you what most traders do. They enter a trade and immediately start hoping it goes their way. They ignore clear signals to exit because they think the market will turn back in their favor. They hold on to losses because their bias tells them they're right. Great traders react to what's in front of them. They don't force trades. They don't fight price action. They adapt. If you're struggling, you have to ask yourself, am I actually seeing the market clearly, or am I letting my expectations control me? Your perception of the market shapes your results. If you believe the market is out to get you, if you chase certainty, or if you ignore what's in front of you because of what you think should happen, you will always struggle. But if you shift your mindset, you'll shift your results. Now, let's go ahead and talk about something even deeper: your relationship with risk and losses, because this is where most traders completely self-destruct. So a professional trader doesn't just tolerate risk, they embrace it as part of the game. So let's talk about something that most traders don't like to face, which is basically risk and losses. Most traders fear losses. They see them as failures. They take them personally, and that fear is exactly what keeps them stuck. But here's the thing: losses are not just part of trading, they are trading. Your job isn't to avoid them, your job is to manage them. So, with that being said, the first question about this topic: do you truly accept that losses are an unavoidable part of trading, or do you still resist them emotionally? Be honest with yourself. How do you really feel when you take a loss? Do you get frustrated and feel like the market is against you? Do you immediately start revenge trading to make it back? Do you hesitate on the next trade because you're afraid of another loss? If you're reacting emotionally to losses, you haven't fully accepted them yet. And if you haven't accepted them, they will control you. A professional trader doesn't just tolerate losses. They expect them. They plan for them and move on without hesitation. How do you define your risk before entering a trade? Is your approach consistent, or do emotions influence your risk decisions? Here's where most traders fail. They just risk based on emotion instead of a set plan. Ask yourself these questions. Do you always define your risk before placing a trade? Do you stick to a fixed percentage, or do you risk more when you feel confident? Does your risk management stay the same after a loss, or do you start increasing or decreasing it emotionally? If your risk management changes based on how you feel, you are not trading with discipline. And without discipline, you have no long-term edge. If you weren't sure a trade would be a winner, would you still take it? Why or why not? The interesting part is this question exposes a dangerous mindset: the need for certainty. Many traders hesitate because they want confirmation that a trade will win before they take it. But think about it. No trade is ever certain. If it were, the market wouldn't work. Your job isn't to predict. Your job is to execute your trade. Winning traders take trades based on probabilities, not guarantees. If you hesitate, you're chasing certainty, and certainty doesn't exist in trading. Professional traders accept the uncertainty and still take the trade. Amateurs hesitate, overthink, and miss out. How do you mentally process losing trades? Do you view them as failures or necessary cost of doing business? Think about this. How do you process a losing trade? Think about this. How you process a losing trade will determine your long-term success in the market. So ask yourself these questions. Do you take losses personally, like they're a reflection of your skill? Or do you see a loss as a failure? Or do you recognize it as a cost of doing business? Most importantly, do you review your losing trades objectively? Or do you just try to move on without learning from them? The best traders in the world lose trades every single day. What makes them different is they don't let losses define them. They treat trading like a business. And in a business, losses are an expense. Your job is to keep expenses low while maximizing profits. Is there a cost to finding out what the market will do next? And if so, how do you quantify it? Here's a perspective shift for you. Every trade you take has a cost. It's not just about whether you win or lose. It's about how much you have to risk to find out. Think of every trade as an investment in information. Your stop loss is the price you pay to get that information. The question isn't, will I win? The question is this trade worth the cost of finding out? When you start seeing trading as a game of probabilities and cost, instead of just winning versus losing, everything changes. Risk and losses will never go away. The difference between a struggling trader and a professional is how they handle them. If you're still fearing risk, hesitation on trades, or letting losses shake your confidence, that's a sign you need to shift your mindset. Now let's take this deeper, because even if you accept the risk, that doesn't mean you're executing your trades the right way. So next up, we're going to be talking about execution and decision making under pressure. Your ability to make clear, unemotional decisions separates professionals from gamblers. So now that we've talked about risk and losses, let's get into something just as crucial, which is execution. A strategy is useless if you can't execute it properly. Many traders know what they should do, but when it's time to act, hesitation, fear, and second guessing take over. The difference between professionals and amateurs: professionals execute without hesitation, amateurs freeze up, overthink, and let emotions control them. So with that being said, does your strategy provide clear rules for when to enter and exit a trade? And most importantly, do you follow them without hesitation? Having a strategy is one thing. Following it with discipline is another. So ask yourself this: do you have clear entry and exit rules? Or do you just go with your gut? When your setup appears, do you execute immediately, or do you hesitate and wait for more confirmation? Do you follow your exit plan, or do you hold trades longer than you should? If you're not following your own rules, your strategy doesn't matter. Trading isn't about knowing, it's about doing. Your edge comes from executing consistently, not picking or choosing when to follow your plan. So even when your system signals a reversal, do you struggle to flip your position? This is a big one. Let's say your trade is moving in your favor, but then you get a clear reversal signal. Do you hesitate and hope it turns back your way? Or do you ignore the signal because you feel the trend will continue? Or how about exit too late and giving back most of your profits? This is emotional attachment, not trading discipline. A professional trader trusts the system, not their emotions. It's the whole point of why you backtest. When the market tells you it's reversing, you listen immediately. If flipping your position is difficult, ask yourself, are you attached to being right, or are you committed to making money? Have you ever found yourself in a profitable trade knowing it's time to exit, yet refusing to take profits? This is where greed takes over. You see profits on the screen, but instead of closing the trade, you think, maybe it'll go a little higher. Let me just wait one more push. I don't want to leave money on the table. And then the market reverses and profits disappear. And then what? You kick yourself. A disciplined trader exits when the plan says to exit, not when emotions say to. So ask yourself this: do you have a structured take profit plan, or do you just wing it? Are you holding trades longer because of hope, greed, or FOMO? Do you regret not closing when you had the chance? Have you ever planned a trade but failed to execute it? Conversely, have you ever taken a trade you never planned? Why? This exposes the real gap between knowledge and action. Every trader has been there. You analyze the market, you see the perfect setup, but you hesitate and miss it. Then a random trade appears and you jump in impulsively without a plan. Why does this happen? Because hesitation comes from fear, and impulsive trading comes from FOMO and impatience. If you're missing good trades but taking random ones, your decision-making process is broken. Professionals only take planned trades. They never chase, never hesitate, and never act impulsively. How often do you feel compelled to take a trade out of fear of missing out? Now, let's be honest. How many bad trades have you taken just because you didn't want to miss the move? Here's some things about FOMO, fear of missing out. It makes you do a couple things. So first, chase trades after the move has already happened. Secondly, you enter late with bad risk to reward. Third, trade setups that don't fit your plan just because others are talking about them. The market isn't going anywhere. There will always be another trade. If you can't sit on your hands and wait for the right setup, you're not trading, you're gambling. So execution is where traders either win or lose. It's not about how much you know, it's about how well you act under pressure. So ask yourself, are you executing with discipline, or are emotions still running the show? So next, let's dive into something even deeper: emotional control and how your psychology influences every decision you make. So your emotions in trading can either be your greatest weapon or your biggest weakness. If you let emotions control you, you'll trade on impulse, you'll chase losses, and sabotage your results. But if you learn to control your emotions, you'll trade with clarity, discipline, and confidence. The best strategy in the world means nothing if your psychology is broken. So let's dive into how your emotions shape your trading decisions. The first question: do you struggle to move on from past trading losses or mistakes? How does this affect your performance? Every trader takes losses, but how you respond to them is what determines your success. If you're holding on to past mistakes, ask yourself these questions. Do you hesitate to take new trades because you're afraid of getting it wrong again? Do you let past losses affect your confidence? Do you find yourself trying to get revenge on the market after a bad trade? A loss is only permanent if you let it affect your future decisions. Professional traders don't dwell on mistakes. They learn from them and move on. Have you ever had periods of strong consistency followed by severe drawdowns? What do you think causes this cycle? If you've ever had a streak of great trades only to give it all back in a few bad ones, you're not alone. This cycle happens because of one thing: overconfidence. You start winning, you feel invincible, you take bigger risk, and you break your rules. And then the market humbles you. The real challenge isn't winning, it's keeping what you make. Consistency isn't about hitting big ones. It's about maintaining discipline even when you're on a winning streak. How do you feel when you make a perfect trade? Does that emotional high impact your next few trades? Think back the last time you made a perfect trade, the kind where you nailed the entry, held through the move, and exited at the perfect spot. How did that make you feel? Did it give you a rush? Did you feel overconfident? Did you start forcing trades afterwards, trying to recreate that same high? This is a dangerous trap. The best traders don't chase emotional highs. They treat every trade as just another trade, whether it's a win, a loss, or a break even. Your emotions should never dictate your next trade. Your rules should. Do you believe that mental flexibility is more important than having a perfect strategy? Why? Most traders spend years searching for the perfect strategy, one that never fails, that never loses, and works in every market condition. But let me tell you the fact that doesn't exist. The market is always changing, conditions are always shifting. What worked yesterday might not work tomorrow. That's why mental flexibility is more important than the strategy itself. The best traders adapt. They adjust to the market, not the other way around. Ask yourself, are you willing to change, or are you stubbornly attached to one way of trading? Have you ever had sleepless nights worrying about the markets? What does that say about your risk management? If you're losing sleep over your trades, that's a red flag that something is wrong. Stress comes from uncertainty, and uncertainty comes from poor risk management. So ask yourself, are you over leveraged? Are you risking more than you're comfortable with? Are you consistently checking your phone, worried about what the market is doing? A professional trader can sleep peacefully because they know their risk is controlled. If a trade is keeping you up at night, you're trading too big or without a proper plan. At the end of the day, your success as a trader isn't just about skill. It's about emotional control. The market will test you, it will frustrate you, and it will challenge you. If you don't master your emotions, the market will always beat you. Now, the illusion of perfection and greed. Many traders chase perfection. This is a losing battle. Let's be honest. Most traders aren't trying to make money. They're trying to be right. They want the perfect entry, the perfect trade, the perfect exit. And in the process, they sabotage themselves. Perfection doesn't exist in trading, and chasing it will cost you everything. Let's break down the psychological traps that keep traders stuck in this illusion. Do you feel satisfied with profitable trades, or do you often think, I could have made more? Have you ever had a winning trade, but instead of feeling satisfied, you thought, if I had held a little longer, I could have doubled my profits. If I had entered sooner, I would have caught the whole move. That was good, but it wasn't perfect. This mindset is dangerous because it stops you from appreciating consistency. A profitable trade is just a successful trade, period. Your job isn't to milk every last pip. It's to follow your plan and get paid. If you're constantly thinking about what you could have made, you'll never be satisfied. And unsatisfied traders make reckless decisions. When entering a trade, do you focus on potential gains rather than potential risk? Most traders enter a trade thinking, if this goes my way, I'll make a fortune. But they rarely stop to think, if this goes wrong, how much am I willing to lose? Great traders think in terms of risk first, reward second. Your focus should always be, how much am I risking, and is it worth it? If the trade goes against me, am I okay with taking that loss? If I only think about profits, I'm not a trader. I'm a gambler. The market does not care about how much you want to win, but it will punish you if you don't respect risk. If you could instantly acquire one trading skill, what would that be? Why do you believe that would change your results? This is a great question because it reveals what you think is missing from your trading. If the answer is, I wish I could predict the market better, you're chasing certainty which doesn't exist. I wish I could pick the best trades, you're still focusing on being right. The answer should be, I wish I had more discipline to follow my plan no matter what. Discipline, not prediction, is what separates winning traders from losers. Have you ever hesitated to take profits because you wanted the perfect exit? What happened next? Every trader has done this at some point. You're in a profitable trade, your take profit is approaching, but instead of closing the trade, you think, what if it keeps going? I don't want to leave money on the table. And then the market reverses. Profits disappear, and you regret everything. This happens because traders are greedy for perfection. They don't want to just win, they want the perfect win. Professional traders take profits according to plan. They don't hesitate, they don't get greedy, they just execute. How much of your trading behavior is driven by desire to be right versus desire to be profitable? This is the ultimate question. Do you want to be right or do you want to make money? Are you holding on to losing trades just to prove your bias was correct? Are you ignoring clear reversal signals because you think the market should go the other way? Are you cutting your winners short because you're afraid they'll reverse even though your plan says to hold? The market rewards execution, not ego. If your goal is to be right, you will lose. If your goal is to be profitable, you will adapt. Perfectionism and greed ruins traders. If you're always chasing the perfect trade, you will always feel like you're missing out. If you only focus on making money but ignore the risk, the market will humble you. The goal isn't to be perfect. The goal is to be consistent. The keys to long-term success. Trading success is not about one big win. It's about consistency over time. At this point, we've covered market perception, risk, execution, emotions, and the illusion of perfection. But there is one final piece to this puzzle, and that's long-term success. Most traders focus on making money, but real success comes from keeping it. The truth is, trading isn't about one big win. It's about consistency over time. So let's break down what it really takes to win in the long run. What does trading consistency mean to you? Do you believe you have it? Everyone talks about consistency, but few traders actually define it. Consistency isn't about always winning. It's about always following your rules. So ask yourself, do you take the same setup every time? Or do you trade based on emotions? Do you manage risk the same way on every trade? Or does it depend on how confident you feel? Do you have a structured routine? Or do you just show up and see what happens? If you're not trading the same way every day, you don't have consistency. You have randomness. And randomness will never make you money long term. What's your philosophy on taking money out of the market? Do you have a structured approach to withdrawing profits? Most traders think success is about growing their account. But if you never take money out, what the hell is the point? Do you have a plan for withdrawing profits? Do you reinvest everything hoping to grow faster? Are you treating your trading like a business or like a gambling account? A trader who never withdraws profits is just playing the market. A real professional knows when to take money off the table. How much of your trading results come from execution versus overall mindset? See, most traders assume their success is based on strategy and execution, but the truth, mindset is everything. If you lack patience, you'll take bad trades. If you fear losses, you'll hesitate on the good ones. If you're emotionally attached, you'll break your own rules. Your biggest challenge in trading isn't the market, it's your psychology. You don't need more strategy, you need more discipline. In your opinion, why do most traders fail to make money or struggle to keep what they make? Here's the reality. Most traders fail for one of three reasons. One, they don't have a real edge. They jump from strategy to strategy looking for the holy grail. That hopping from strategy to strategy is literally what's been happening forever. Two is lack of discipline. They have an edge, but they don't follow their own plan to get the edge. Third, they get greedy. They win, but they overtrade. Risk too much, and they give it all back. Trading isn't about winning big. It's about avoiding the mistake that caused failure. If you master your mindset and follow your process, the money will take care of itself. Everything that we've talked about in this video is not just theory. It's the foundation for long-term trading success. If you want to separate yourself from the 95% of traders who fail, you need to do the following. Number 1, shift your mindset. Number 2, accept risk and manage it properly. Number 3, master execution under pressure. Number 4, control your emotions. Number 5, stop chasing perfection. And number 6, focus on consistency over time. This is what it takes to win in the markets. Now, I want to hear from you. Drop a comment below. What's one mindset shift you know you need to make? Guys, if this video helped you, make sure to like, subscribe, and stay tuned because we're just getting started. Until the next one, have a good one.